All right. Good morning. Good afternoon, everyone. It's Trendy John at Simpler Trading. Today is the 28th of December, 2024. I just got back from my vacation. I'm super excited to be here. As you can tell, it's Saturday and I'm already doing the broad market analysis. That's because I'm getting prepped for the week coming up and I want to be able to give you guys charts in advance so you can identify where you're looking for the bigger turns in the market. A couple things on a personal note. I do have my grandson who's coming into town this week. Matter of fact, he will be surprising us tonight. He'll be coming in with my oldest daughter. And so we're just really looking forward not only to spending some time with him, but also bringing in the new year with all of our family and friends. And that also includes you guys. So I couldn't be anywhere else that would make me any happier than where I am right now, and I just really, really appreciate you all. I hope you had a wonderful holiday. Let's go ahead and get started with this week's broad market analysis. Now, but before we do that, go ahead and hit the like button. Go ahead and share this with a family or friend who's looking to get into the stock market in 2025 because maybe they looked back and saw what you were able to do and said, hey, I want to be able to do this. So, again, please share with them the knowledge that I am sharing with you and pay it forward. Let's go ahead and start this week with the major U.S. economic reports and Fed speakers. As a reminder, I am a professional supply and demand trader. What I'll be doing is identifying levels on charts, and we are looking to take the advantage from other traders who are not able to have an edge in the market. These catalysts I'm about to go over with you are just catalysts that pushes price to those supply and demand levels that we'll be looking at here shortly. Far as Monday is concerned, it is December the 30th. We have Chicago Business Barometer PMI, and then we have pending home sales that come in as well. So honestly, it's pretty quiet. Then on Tuesday the 31st, this is a half a day. We're looking at the S&P K-Shiller, and then on Wednesday we have a day off, New Year's holiday. So once again, just like last week, make sure if you're buying options, in my opinion, you're buying at least the next week, not this week, unless you understand the risk of holding options where premium decay will be coming out of those quite fast if you don't get the move that you're looking for. On Thursday, when we come back from the holiday, we do have initial jobless claims that should bring a little bit of volatility to the market. And then we have some construction spending. And then Friday, January the 3rd, ISM manufacturing. That will lead us into the next week of major US economic. And we'll be coming back and we'll finally get like that full week. But you know what's funny is that a lot of times for an entire month, including last week, and then, this upcoming week, things do feel a little lethargic as we get prepared for financials. So banks are coming around, and you'll be seeing that here on the calendar in a second around the 15th of January. So it's pretty quiet out there, as far as economic reports, earning whispers. People are still having their time on their vacation with their family and friends. And I think that's really important to understand, but also for us to understand as traders because we put so much time and devotion into what we do. This is that one time of the year that I think it's really important that you just kind of relax a little bit and, have fun. All right. So the next week when we come back, we'll be looking at a little bit more of volatility, most likely, especially with minutes of the December FOMC meeting, consumer credit, initial jobless claims, US unemployment, and so forth. Okay. The next thing I want to look for, and as I was saying, is the US or the earnings whisper that I use here on X. And you guys can see we got through most of the earnings up here, and then it gets really, really quiet. And so for this upcoming week, not much going on at all. And then that next week, things start to kick up a little bit. Not really many names that I'm interested in at all. It's all about the 15th through the, starting here with financials. So we could see that Citi's coming up, and then you have Morgan Stanley, Bank of America, Goldman Sachs, and so forth. So I would say if you're interested in charts or interested in playing earnings, I would be looking at the JPMs, Bank of America, Goldman Sachs, and looking at those charts and identifying your supply and demand levels and playing off of those levels as we get earnings season kicking up in a couple weeks. Okay. The next thing that I want to look at, we're going to go into trading view and we're going to take a look at the bigger picture. So each one of these represent 1 quarter, each one of these candles. And you can see it's been a very strong year. It was absolutely beautiful, but you can also notice that we are extended quite a bit off of the 9 EMA cloud. And that is just something I want to continue to reference. While I'm sitting here on the larger time frame, I will be working in the background for our 2025 projections. So in the room, you'll notice a new tab that says 2025 Outlook. The only thing that I put in there so far is a couple paragraphs of things that I'm looking at. And then over the weekend and before the first, I'm working on putting those charts in there so that you all can get familiar with my outlook for 2025. And I'm sure all of you know our 2024 projections. Every single one of them worked out except for, believe it or not, IWM. So we came in about $8 short of our projected price target, but that didn't mean we didn't make money. So if you recall, we made about 700% total off of our trade that we took last year into 2024. So although we did not hit our target, I'm sad to say we still did well. So overall, IWM was a great trade. But again, I think the focus should be you should be interested in what we are going to be projecting for 2025 because I can tell you right now the charts look completely different than what they look like at the beginning of 2024 and at the end of 2023. So you won't want to miss it. I will note or let you know that I won't be doing a live session around this. I'll be actually doing a video where I'm going over the charts, giving you my projections, why, going over those specific levels, talking about potential trades that we can be looking at putting on. But I want you to be able to watch it at your own leisure. And that way you can take it in, digest it. And if you have any questions, please reach out to me. Now, in the tab in the room, you will see all the charts right there as well, just in case you know you don't want to watch the video and you just want the levels themselves. Okay. So those will be in there and expect those to be in there before the first. All right. Moving on the SPY. Again, like I said, this week, a nice rebound this past week that led price right to the supply zone that I had given you before I went on my vacation. Matter of fact, we hit it perfectly. Prices pulled back just like I would expect. And we saw that pullback last into Friday. And now I'm actually expecting a little bit more of a bounce. So listen, as long as price holds above 593, I would expect another attempt towards 600 into this short week. The quarter candle closes this coming Tuesday, so that is important to understand. Again, right here, you guys can see we have 3 days, 3 hours before that candle ends up closing. And again, that's on Tuesday, which is a half a day. Now, could we make it up to 600? I don't see any catalysts so far over the weekend that suggests that we would make it to 600, but there are a couple things on smaller time frames that I wanted everyone to take a look at so we can kind of understand where we are. So hold tight as I pull over the SPY chart based on Fibonacci's, but also looking at um, Thinkorswim real quick. So I'm going to detach this chart. I'm going to bring this over. Okay. And right here, and you guys can see this chart in the room as well. One thing I want you to note is we already had the supply zone here, all right, not only there, but on the SPX chart and the ES futures and so forth. So while I was gone, we got the play that we were looking for. Prices continue to push up. They came up to the supply zone. You see the rejection here. Friday, we had the nice pullback, which might have shook out a lot of traders. But at the end of the day, there are some key notes that I want to go over here. One, we came into demand, we got the push that I wanted, we saw the projection up into supply, the pullback that was expected. All right. Remember, we're coming into a supply zone. We had a lot of congestion here, and that's why we saw the pullback. I don't care about the news. Again, we're identifying supply and demand before price gets there. Our jobs are to align ourselves with the bigger money and take action. So What happened on Friday? Again, we just pulled back, but we ended up holding above the 38.2, which is the bullish channel of the range that I have identified. This is the range. I anchored my coefficients from our Fibonacci's from that point to that point. You can see we came down into the 618. We held that 618. We talked about that the week prior. And then we came up into supply, and now we're holding the bull channel. So overall, the overall bigger trend still remains really bullish. All right. So things look really good. Again, it just looks like they shook the tree once again. Now, your key levels going into this week that I believe are very important are going to be this 38.2, which is around 593, and then back up towards the supply zone, which is going to, and I'm going to give you a little bit lower of a number, which is going to be this 23.6. Let's just call it 600. So in those notes, I said, hey, we could see a move towards a 600 plus level. I'm identifying this level here, 599.36. And far as like what I want to see hold is 593.30. If that doesn't hold, then you could see prices come back into 589, 590, which is where I'm expecting buyers to show up on the SPY chart. Okay, let's go ahead and minimize that and let's get over here into the QQQ. All right, so on the cues, again, you would expect sort of the same idea here. You guys can see that we're definitely extended above the 9 EMA. We've come up, we hit some targets. Price bounced nicely from the weekly 9 EMA. I talked about that on our last broad market analysis. I was expecting a bounce. We definitely got that. It was a beautiful bounce. But just like the SPY, we came up into a little bit of area where we would expect it to reject, and that's what we saw on Friday. So, although price pulled back towards the end of the week, the bulls were able to hold above the bull channel. Stay focused on the two major levels for this week. That way we can really close out on the year very nicely, okay? So I'm going to pull up this chart one more time and we're going to now look at the cues on a smaller time frame. So overall the quarterly looks great, but we know it's extended. So this is what we had last week. Now, price didn't make it to the supply zone. So, what does that mean? That means I'm looking for the cues to lead this short rally potentially into the end of the year. Okay. And again, we're not working with a whole lot. We only have Monday and then a half a day on Tuesday. Right now, I believe our major levels going into the cues are going to be 518 and then up here towards the supply zone at 533. Now, I want to make this very clear. It sounds like I'm getting a cutoff date, so everything is about the end of the year, but really, I want you to look at it from a weekly perspective. The weekly perspective, these are my major levels. So by the end of Friday, I'd like to see the 518 level hold, but I would also like for us to at least try to move up here towards the supply zone. Last week, I said that if the SPY had pushed into the supply zone, that it gave you the opportunity to go ahead and lay into a short that would be set up for the February March timeframe. Now, listen, if you did that, that means you on Thursday took the short when we hit the supply zone, and then you did really well on Friday. Okay. So again, if you watched the broad market analysis and you paid attention to the supply zone and you executed off of it, you did really, really well. Now, me, I was hanging out with the family sitting in North Carolina. I was not trading. And so that was really nice for me to kind of just sit back. But I hope you guys who were in front of the charts were able to take advantage of that. Okay. So QQQ makes me feel like, hey, these guys are going to lead. Listen, it came down into the 38.2. It bounced perfectly. We have a trendy edge that happens to be right around the 38.2. So again, the major levels, you guys can see them. If for some reason we bounce into Monday morning and we see ourselves get above 526, there could be a power move up into the upper trendy edge here at 529 by 533. So my projection is, if we get over this 23.6, things look really good into 529 and 533. I like the idea that the Qs, the Nasdaq can lead us into supply, but just like the SPY, I think it sets us up for a potential short. Okay. There's no catalyst that I've seen so far that are set up to push us through supply going into the year end. But I do see a catalyst for us to continue the trend into the year end, Tuesday afternoon, to continue the trend up. So we shook out some traders on Friday. Look for the bounce coming into Monday and Tuesday. And then, if for some reason we get into this area, I believe this is setting up for a short again for us to get ready for banks that are rolling in on the 15th. Again, I'm wrong if prices sustain and get over the supply zone, but for right now, this is the big line in the sand, if you will. Okay, so again, that's QQQ. Next thing I'm going to be looking at is right back to the trading view, we are going to take a look at the dollar. So the dollar looks super strong. All right, it looks super strong, and when the dollar is moving up, we're looking for the market to get a little bit more volatile. And most of the time, when the dollar is strong, we're looking for the market to go sideways to down. There's a couple things here that still are saying big red flag, warning, be careful, and I'll go over those with you in the next couple charts. So the dollar, it comes up to the back end of supply. It backs off. It's unable to close over this supply zone so far, but I would be very, very careful if we take out next week's high and we continue that move to the upside, as we could see the dollar start to push up towards 110 and possibly even 115. This area in here, right around this congestion, okay, I would expect the market to be pulling back. Things are really, there's a lot of fear coming in. It all makes sense. It's all going into earnings. They're pulling things back. Things are extended. The dollar's getting really strong. And as we come up to the 112 area, you'll see that right in here, there's all of this down pressure. I would expect the dollar to back off from here. And then we set the tone, or set the stage, I should say, going into earnings. Okay. Right now, the major levels for me is, if the dollar breaks underneath the cloud, things start to look really good again for the market. But if the dollar breaks over last week's, or say 2 weeks ago, this high up here, if it breaks above there, then I would be taking caution. So let's go over that one more time. This pivot here, be careful. If for some reason the dollar breaks down and comes right into this cloud, be careful. If prices close underneath the top of this 9 EMA, things look great. We're looking for prices to continue to move up in the overall market. Okay. All right. So the next thing we're going to look at is the TNX, which is the 10-year treasury. And same thing. You guys can see a pattern here if you've been watching my broad market analysis. Dollar's going up, TNX is going up, then the market's going sideways to down, volatility's coming in, and you could take a look at the VIX as well. So what do we have here? Well, again, like I always say, I'd like to see the 10-year just kind of cool its jets, go sideways, digest. It just makes for a better market for the bulls. Now, we are over the 618, and you guys know what I say. When we get over the 618, you can see the 88.7. Last time, the imposter level, which is the 76.4, did its job. But it did its job to an extreme. A lot of times when we pull back from that 76.4, you'll hit this and then we'll get a really big bounce. We got a little bit of a bounce, but a lot of times that bounce will push you up to the 88.7. This time, the question is, does this level really hold again? And it could. So listen, you're over under, or your line in the sand for this week. 4.67, anything above that, be cautious. Anything below 4.4, feel a little bit better about the market. Basically, what I'm saying is I would expect prices to range in here, but if they were to break above there, be careful, as we could see a move all the way up into 4.8. This is where I think extreme fear sort of comes into the market again. And if for some reason we take out the highs of 2024, was this 2024? Give me one second. It looks like that was 2023. If we take out the high of 2023, just know things look pretty scary out there in the market, and I definitely expect extreme fear to come into the market. Okay, which really, I mean, sets up into the whole inauguration. Trump coming in and stuff like that. Maybe it's a buy the dip opportunity. Either way, I'm welcoming any sort of pullback that we may or may not get. Okay. All right. So that's the TNX. And then as we move down, let's get into the skew. All right, and you guys know the skew means a lot to me. Just like last week, I told you, hey, I was looking for a bounce because we closed here. We got the bounce just like I was looking for. And then as we made an all-time high in the skew, that should have, if you've been watching this, you better know. I'd be disappointed if you didn't, that you need to take extreme caution and look for buying puts 30 to 90 days out. And if you did so, then you probably capitalized off of that. All right. Now, this week is no different. We're sitting at 167.92. That is a very extreme reading. But it's also got this topping wick, which tells me that, as long as this is going down, all right, kind of like this, then most likely what we're seeing is a little bit of fear in the market, and then I would look for buyers to come back up. So when I put all this together, you got the dollar that's saying, hey, cool your jets. You got the TNX that's saying, cool your jets. You got the skew, same thing, take warning. All of these things, again, good reasons to stay neutral here. All right, don't get caught thinking something has to happen. Price is king. So no matter what I say in this video, again, know your levels, know what you need to do at your levels, and understand your allocation and execute. Okay. So again, skew is at extreme caution. Let's go ahead and move on to the fear and greed index, which pops up, and you guys can see it's in fear. All this is saying is the majority of participants are fearful. Perhaps they are buying puts, on Friday, and when the market is fearful to extremely fearful, they like to rip the market. And then, you look back and you go, man, all they did was create fear and I got stuck. Now, listen, it's not one of these things just because it's in fear or extreme fear that we go out and we buy the dip. That's not how this thing works. It's just to take note, but to also take note of the cycle. How many days have we gone down? It's usually 2 to 3 days down, 2 to 3 days up, digest, and then you look for that next move. So we'll be looking at that here in a second. Let's go ahead and move on to the futures. So I'm going to click here on the ESH25, and we are going to go, and I'm working on the 2025 projections, like I was saying, just in case you see some of those charts pop up here. All right, so here's the weekly. This is the first chart I want to go over. Overall sentiment, neutral to bullish. I say bullish because my gut says we end the year in the overall trend of the past year, which has been very bullish. Okay, again, that's gut. Price is king, bullish. However, it looks like a pullback as the market prepares for bank earnings. So a little bit bigger picture is that we're getting the pullback. See how the ES futures came up and smacked our supply zone? We're getting the pullback that I would like to see. These are the major levels right here, as far as ES is concerned, going into the next several months. Okay. Remember, up and over, it's a different story. But for right now, this is the wall, if you will. All right, the wall of worry. All right. So, weekly sentiment, neutral bullish, not much change from last week. It created an inside week, which this is really important. This is an inside week and closed above the weekly 9 EMA. Well, that little line right there is the weekly 9 EMA. We are still stuck in a range until we are not. Just like I mentioned last week's bounce into supply was the opportunity to short into February, March, in my opinion. Again, you could have taken the short and made profits on Friday and said, no, I don't want to hold anything into February, March. The zone below is also possible. Therefore, the demand and supply zones are the range going forward until they are not. So, again, until they are not. Notice this one is all the way down here at 57.64. I'm not saying we have to come back to that zone, but for right now, as far as the weekly is concerned, these are my two zones that I have identified. We could also go bid right here and see buyers at 58.24. For right now, this is what we have. Let's go ahead and move on to the daily. Now, the daily, I went ahead on X, and make sure you guys follow me on X. I gave you a before and after of what this looks like, and it worked perfect. Okay, it worked absolutely perfect. And let me see if I can bring that up real quick. Give me 1 second here. Just in case some of you don't follow me, um, we'll see if we can get you guys out here. And let's go to home. Here's my profile. And you guys can see right here, this was the before and after. And I talk about this simple technique. This could have made you a lot of money. So this was coming in, um, this was our demand zone. Price came into that. We were looking for the bounce. And then I said, hey, listen, this is a short trigger. You want to look at smaller time frames and so forth. But all I did was identify the inside and down formations in here. And so price went from an inside and up to an inside and down, and boom, it came down. And you guys can see the next picture. Look at that. Absolutely perfect. Okay, so worked really, really well. All right, and I just want to show you that. And then remind everybody right here, if you go into my profile, this is me, and this is where you can follow me. Just make sure the numbers are the same. There's a lot of imposters. I mean, like a lot. There's a lot of people out there that have the same exact profile as me, same pictures, but the numbers are weird or the name is not spelled correctly. So make sure that you're looking at this and make sure it's me. Okay. All right. So the daily going into this week, all I did was I put the resistance level at the trendy edge. I put a new trigger long at the trendy edge. All right. And so we're playing right off the bat, we're playing within this range right here. Anything above that, look for a move into this trigger short here. And anything below that, we could see prices move down into the 59.40 level and so forth. Now, again, I'd really like to see this hold, all right, before Tuesday afternoon. Okay. But we did, it's important that I identify this. Not only is this an inside and down, but we just created an inside and down right there as well. So we are creating pockets of supply above, which means we have a lot of selling pressure above us. And again, take it as you will. Personally, I think the better buy is obviously further down here on the clearance rack than it is up here. It doesn't mean we can't make money to the upside, but it just the risk to reward is not that great at the moment to the upside. Okay. All right, let's move on. This is your 4 hour chart. The 4 hour is the same chart for this week as it was last week. Nothing to change here. You guys can see again proof of concept. We came into supply zone. This is where I told you to be careful. Prices came back. We stopped basically halfway through. So if we look at this from an equilibrium standpoint, you're stuck in the middle, and what they say, don't diddle in the middle. For people out there that trade credit, if you want to sell credit, I like the idea of selling the zones. I think that these levels hold, and I think we just stay in between both of these, at least into, I'd say, Wednesday morning. All right, and then it starts to get a little bit more, sorry, until Thursday. It starts to get a little bit more interesting on Thursday with a little bit more major catalyst coming into the market. Okay, but this is my range. It's a lot like last week. We're just kind of stuck. All right. Next thing I want to be looking at is the NASDAQ. So let's go ahead and click there. All right, and let's get over to the weekly. This is what we have. All right, so you guys can see a little bit different. Like I said, I think the NASDAQ leads the way. Make sure when you're in the morning, you guys know me, every single morning I'm going to be showing you the NASDAQ and the ES futures. The NASDAQ futures are leading the way. They look strong. They're above the 23.6. They're definitely above the 9 EMA. Things look good. There are topping wicks, a lot like the ES futures. I'm bullish, but with a little bit of caution. I'm a little bit more bullish on the NASDAQ side. But again, price is king. I would use this 21,587 as your over under. Just know if for some reason if we do pull back this week, I do think it's a buying opportunity around this 9 EMA and in this green zone. Again, I'll be looking at the smaller time frame as far as the weekly is concerned. I feel like the top's in, but we could head up into or towards this area again that I was showing you guys on the QQQ. And I do feel like this will hold as support for this week. Let's go ahead and move on. This is your daily. Your resistance is at a trendy edge. Your buy trigger is at a trendy edge, and your next buy trigger is down here at trendy edges as well. And far as the short trigger, this is your supply zone. Just like the ES futures, again, we did create an inside and down here as well. So we have two supply zones above. That tells me right away, even on a bounce, we're kind of stuck here between here. Okay. Again, the better risk to reward. to me looks like to the downside. I would prefer a pullback, a healthy pullback, but I don't know how much that pullback that we get since we're just a couple weeks out from financials. Even though I don't think they have a big impact on the market, they could use the financials as a good catalyst to pull prices back into um, Trump being sworn in. Okay. So, anyways, let's go ahead and move on. We'll come over here. Same chart on the 4 hour that we used last week. Same thing. If you were to, measure between this zone and this zone, you can see we're about 50% of the way. It's anyone's guess. You know, Overall, big picture, we're bullish, but you guys can see here on the smaller time frame, it's just chop. Okay, we're chopping between. And again, guys, if you like to sell credit, in my opinion, we're staying between these two zones going into this short holiday week. Okay. Now let's go ahead and take a look at Bitcoin. Bitcoin is really important as well. So I want to make sure we get over here. One thing that I noted this week on the broad market analysis was looking at the higher time frame. The monthly is very, very important here. We did end up hitting the target. Yeah, I was getting super bullish. I was like, man, let's hit 114. Unfortunately, we only hit around 109, which was still amazing. You guys can see it's super extended. Huge topping wick. All right, and an inside month. So as long as we're inside, okay, and we stay inside unless price gets above 98,560, okay, I don't mind seeing this. It can help us gauge into January. So in January, if we end up in December closing as an inside, that means January, I'll be looking for whether or not we can go inside and up, or again, it feels like the better risk to reward is down. Again, I could be wrong. And inside and down would look like something like this. And then we're looking for, covering shorts down here at 87. And it's possible you could see like this going into, February, March timeframe. And this kind of cleaned the socks off a lot of people who bought the highs in 2024. You kind of reset the market. Um, and then look for buyers to come in the market like this, and then we stall. And then, again, I'm giving you my 2025 projection, so look forward to that. But this is kind of the direction. We have a lot of imbalance to the downside, right? You guys know just as well as I do. I feel like have been a huge bull for a very long time. I'll continue to stay bullish as long as the trendy methodology that I teach you stays intact. But it's also very important to understand that there was a lot of imbalance created over the last several months. Okay. So again, doesn't mean we have to come back and test it, but my 2025 projections will have a lot to do with imbalances in the market and, being very patient and looking for the best opportunities. The backdrop is a lot different than it was in 2023 towards the end into 2024. Okay. So a lot more patience this year. And I know this isn't the 25 projection, but this week, also patience. We're basically, my summary, we're caught between two opposing zones. My gut tells me that we finish on a strong note because the overall trend. However, the QQQ, also a very important detail of this week, or the NASDAQ, we did not test the supply. It is possible that we pop up into supply, but until I'm wrong, I believe those red zones above are going to act as a wall and get us a further pullback into our earnings that are coming around the 15th. Now, again, any sort of catalyst can come out in the market and I could be wrong immediately. But for right now, we're only looking at zones. We're identifying those zones. I teach you how to trade those zones. So I hope you're ready for 2025. And I hope you appreciated this broad market analysis. If you have any questions, please reach out to me. Have an amazing, beautiful weekend, and I'll see you guys this week.